very good morning, guys. On Friday evening, the screen told you India had a terrible day. Nifty was down 359 points. Sensex was down almost 1100 points. The headline said panic. The headlines blamed the Iran deal. The headlines said sell. There was just one problem. The screen was lying to you. This is the Tanmay Edge. You are listening to episode 50. I'm Tanmay Guttagoti. Let's go. So let me take you back to Friday. What happened? 3:30 in the afternoon. For most of the day, Nifty was fine. It actually touched 24,002 in the morning, tagged 24,000 and came back. Boring day. Then in the last 30 minutes, something strange happened. Look at the chart of Friday and you will see it. A clean vertical cliff right at the close. Not a slide, a cliff. The index fell straight into the closing bell and printed 23,547. Now here is the part the headlines got backwards. Friday was not a normal trading day. The monthly contracts had already expired on Tuesday, so Friday was a cash only session monthly close. And Friday was an MSCI rebalance day as well. MSCI runs the global index that foreign funds track, and when MSCI resets its weights, every fund that copies it has to buy or sell baskets of Indian shares in the cash market, all at the closing prices, all in the same afternoon. It had nothing to do with bullish or bearish. It is a rule book, and this is the whole point. The rebalance only forces trades in cash stocks. It does not touch the futures. So the damage showed up exactly in one place. FIS sold 21,106 crore of cash stock in a single day, one of the largest single day sells you will ever see. Our own institutions stepped in and absorbed around 16,764 crore of it. But that's one way basket dragged the closing print far below where the real market was trading. How far below? This is the most exciting part. And at the exact same moment, the screen said 23,547. The futures on the same index were trading at 23,748. The next week, synthetic futures said 23,723. And GIFT Nifty was also trading different. So every single forward price agreed the real Nifty was about 160 to 180 points higher than what the screen was showing. And the gap between the cash and futures is the fingerprint of a rebalance. It had a great opportunity of cash futures or jelly rolls if you traded it on Friday. If Friday had been real selling, the futures would have fallen too. They didn't. Only the cash got hit. That tells you it was MSCI, not the fearing. So Fridays closed with two prices for the same index. The screen was telling us 23,547. The futures said 23,720ish. One of them was wrong. And that is the question I went into the weekend with. Which number is real? The screen that everyone quotes or the futures that almost everyone trades? This morning the market answered it. GIFT Nifty is sitting at 23,726, up about 180 points from Friday's close. That means India is set to open this morning right where the futures said it would have closed on Friday. The gap is closing. The futures were right. The screen was wrong. Cash was giving a wrong picture. This is the whole lesson of episode 50, and it is worth more than the levels I can give you. The closing price you see on television is not always the real price. On a normal day, yes, it is. But on a rebalance day or a day with big forced orders in the last few minutes, the closing auction can get pushed around. The futures can't be pushed the same way because they keep trading. So when the screen and the futures disagree by 180 points, don't trust the screens. Trust the futures always. The data doesn't lie, narratives do. And the narrative on Friday was loud. The mainstream story blamed on Iran deal uncertainty, but if Iran were really the reason, the futures would have fallen too. They didn't. Iran set a little nervousness throughout the day. The rebalance set the cliff at the close. The headlines blamed the wrong thing. The screen lied, and so did the theory as well. So now let's be honest with you, because that is the deal we have. On Friday's episode, I gave you 5 calls and I want to grade win or lose with you. I said Nifty would touch 24,000. It barely hit 24,000. I said our institutions would keep buying. They bought 16,764. But I also said 23,800 would hold up and we could buy on these dips, and it didn't. The auction punched it down to 23,484. Miss. I said volatility should stay calm below 16 and it spiked to 16.35. Again a miss. And I said one of the strong sectors would close green and they all close red. So two of 5, my weakest scorecard of this season we are looking at. But here is what is interesting. The one thing I got most right was the idea underneath all of it, that you should protect, that volatility should go up, and it's a long gamma day, and that was a day to own insurance, not sell it. And that thesis won. My exact levels calls lost it. I will take that trade every time, get the direction of the risk right, even if the precise numbers slip in. Protection paid on Friday, and let's talk about this morning, because the backdrop could not be more different from Friday's close. Wall Street closed on Friday at record highs. Dow Jones with Dell jumping as much as 40% on AI demand. So that was the story on US. This morning, Asia is roaring. Korea is up over 4%, Taiwan nearly 2%, Japan 1%. Crude is trading around that $93 mark. The rupee is steady at 95. And the big event for this week is the central bank RBI. So RBI meets from Wednesday to Friday for the repo rate decision. The repo rate currently stands at 5.25. The monetary policy week is here. With crude down hard over the last month and the rupee holding, the RBI has a room. That meeting 1 to 3 days from now is the real story of the week, and that is what we are going to cover. This morning's snapback is just a warm up. So here is how I am reading today. So if GIFT Nifty is right and we open near 23,700, the first job is simple. Does the market hold the gap or fade it? Now that is what we are trying to decode. Now, how big a move is actually in play? This week's contracts expire tomorrow, and right now the options are pricing a swing of roughly 400 points either way into the expiry. Anchor that to an open near 23,700 and you get a band of 23,300 on the downside to about 24,100 on the upside. That is the field we are playing on for today. Inside it, I am watching 3 numbers. 23,650 is the gap line. Hold it and the snapback is the real story. So if we hold 23,650 in the first 15 minutes, it is a real gap and we are going to follow through it. 23,550 is Friday's fake close. Lose it and the bears get a second look. And 24,000 is the cap, the level sellers keep stacking against, and it has not moved. Underneath, everything sits around that 23,000 mark to 23,300 mark. The line buyers keep defending. So the plan is, if buyers defend the gap and we stay above 23,650, Friday's crash was confirmed fake, and the path is back towards 23,800 to 24,000. If we open up and immediately sell back towards 23,500, then the rebalancing selling was more than real than I think, and 23,300 becomes our support zone where the conversation starts or buying begins once again, which gives me my 5 calls for the next episode. 1. Nifty holds above 23,650 at close today. 2. It closes above Friday's fair value of 23,700. 3. Volatility after the initial bounce back closes below 16 as the auction panic clears in. 4. Foreign selling shrinks hard now. The rebalancing basket is already over. 5. 24,000 stays as the ceiling. We do not close above it for tomorrow's expiry, and we grade them next time we meet. So have a great Monday, guys. 1 auction, 1 lie, 1 gap that closed by morning. Read the futures, not just the screen, and hold the gap. If 23,650 is holding up, go long. This was the Tanmay Edge. If you found value in this, guys, please share it with one trader friend who needs it right now. Subscribe to Apple Podcast, Spotify, so that you don't miss an episode, and listen it live first on rupeecase.com, where it is streaming the first time. And give a rating, guys, and a review if you want to add something to this podcast. So thank you all. See you all once again tomorrow on Tuesday. Have a happy Monday trading once again.